This is the London Fintech Podcast, bringing you practical insights and approaches, stories and inspiration from the innovators who are building the new world of financial services. This podcast is brought to you by NextWave, strategy specialists and solutions for financial institutions. Welcome to the London Fintech Podcast. This is a special episode on the state of AI in financial services. This episode is sponsored by NextWave Consulting, and it's based on a keynote I gave a couple of weeks ago for SS&C Algorithmics at their client conference. So thanks to the SS&C folks for the invite. NextWave are helping enterprise financial institutions to leverage AI and automation to define and deliver their business strategies. They're a bit different from the big brand consultancies through having a senior industry leadership team, mostly ex-MDs from tier one firms, and through a focus on solutioning for business outcomes with fintech and platform technologies. So I sometimes say more software and less PowerPoint from the consulting experience, perhaps, and very much business first, but with great tech. Having said that, I do have a PowerPoint and there's a few pictures that we're going to be looking at as we go through this today. On the show, on LFP, I'm privileged to get to talk every couple of weeks with industry leaders, founders, innovators from firms small and large all across finance and technology. And many of those conversations center around AI. In fact, it's almost in every episode. And there's a golden nugget or two of wisdom from all the conversations, some of which I'm going to be sharing this morning. Today, we're going to be talking about AI and automation. This is a huge topic and there's lots going on and even more is being written and discussed. When I was first asked to create this keynote, I asked AI for some help, but the result was a bit one-dimensional. So I've partially fired my AI co-writer. It still did some of the images, put more of the human in this particular loop, and written this presentation to share my own insights, interesting facts from the industry, and some NextWave frameworks. So I hope you find value in all of that. My goal isn't to add to the noise, it's to cut through it and to give you a sense of what's really going on in the FS sector and where we see it going. There's quite a lot here, so I'm going to get going. First, some context where I'm coming from and where we focus, where I focus principally. The headline challenge, I think everyone will agree, is for all firms to how best leverage data and technology to add value and competitive advantage for their business. It's really all about technological excellence, innovation to enhance your product market fit and your customer experience. And it's true for firms of any size. And if you're not really focused on that fundamental, then you're going to have a real problem establishing and growing a business. The firm goals always sit, and we find this really looking across the sector and looking across the NextWave client base, in three buckets: growth, efficiency, risk and control. I've yet to find a use case or a strategic initiative that doesn't sit in one, and sometimes more, sometimes several of these buckets. Growth, it's all about expanding products and services, market footprint, and scaling out the business. Efficiency, initiatives to enhance the effectiveness and the efficiency of operational, organizational functions and processes. What does that mean? Client onboarding, client operations, process automation, be that in finance, compliance, risk, across the businesses and the functions. Risk and control, well, the clue's in the title. This is all about regulatory response. It's about governance for risk and compliance. It's about fin crime and fraud, sustainability processes and controls. It's a really big area, major focus for all the financial institutions. These are the areas where our clients are investing, and all of them have multiple AI use cases and opportunities. So, AI. Well, read any business journal, attend any conference, scroll through your LinkedIn feed. AI is everywhere. One week we hear about AI achieving superhuman feats in gaming, creativity, or analytics. And most recently it's been video creation, if you've seen VO3. And the next it's headlines that are screaming about job displacement or existential risk. And I think there's substance in all of that. But AI isn't new. Machine learning has been underwriting loans, scanning for fraud, trading the markets and optimizing portfolios for well over a decade. Much of this was machine learning algorithms and narrow AI, as it's sometimes called, solving a particular problem using approaches such as genetic algorithms, gradient boosting, other techniques that I don't profess to be proficient in. I was working on some of this in my former firm in the consulting labs 8 to 10 years ago, and I'm sure many of you across the FS sector were doing the same. Perhaps we might have thought that banking was perhaps taking the lead, but pretty much all businesses have been actively exploring the potential of machine learning and algorithmic AI for some time. And if you go to the cross-sector conferences, be it in the investment management or the insurance space, there's a huge amount going on. I think pretty much the sectors are leveling up on the adoption of AI. In November 22, ChatGPT arrived, and this is a whole new evolution and revolution. Large language models brought the ability to understand natural language and generate speech, image, and text. Suddenly, AI spoke our language, and it's gone mainstream at a pace that nobody might have anticipated. So perhaps the first myth to address today is that nothing is going to change. It's just a tech trend. AI isn't really going to change anything significant. And we still do hear it in pockets. In an industry roundtable just a few weeks ago, well, the comment, well, nothing's changed in 15 years. I don't think it's going to. I don't subscribe to that. I think the genie's out of the bottle. There's huge momentum. There's a POCs, there's adoption, there's production use cases all across the sector. We'll unpack some of that over the next few minutes. But this is very much a sea change, and there's only one direction of travel. PwC estimated that AI could contribute up to $16 trillion to the global economy by 2030. That's not a trend, that's an economic revolution. And perhaps the clearest indicator is the speed of adoption. So ChatGPT got to 100 million active users in just 2 months. Now, that's a milestone that took TikTok 9 months, and it took Instagram over 2 years. And Sam Altman recently updated that ChatGPT now has between 800 million and 1 billion users. That's essentially 10% of the world's population. And the most interesting thing is that that number had doubled since February of this year. So the speed of adoption is just exponential. There have been many aha moments for me personally, but one of them stands out. I'm a user of ChatGPT and a few other models, but principally ChatGPT. And I was using the 4.0 model when they released the new image functionality. And we were away with friends on a country weekend and having a lunch with a couple of people. And we got to talking about websites. My son has a drone. He films drone films, and was thinking to put some up online and try and sell them. So we asked ChatGPT for a name for the business. It gave us 10 names. We chose the best one. It then offered to create a website structure. Said, okay, created a website structure. It then offered to design the pages, and it came back with these pixel perfect graphic images for the website, and then followed through with a deployment structure and the code for putting this up on Squarespace. And by the evening, we had the website up, and by the following day, he'd sold his first video. And I know that some of the audience will be saying, okay, but now we can vibe code all of that and the machine will actually build it for you. Okay, this was a couple of months ago, but it was a head spin for us nonetheless. And just an example of how AI can really now starting to do tangible, useful things. We would never have followed through on all of that if it had been self-learn and a sort of traditional build cycle on creating a website. Probably wouldn't have happened. But this was in moments over a lunch table. We were sitting outside just on the mobile phone. It was extraordinary. A tiny example of AI solving a practical challenge. And there's lots of examples out there. I think the takeaway for me is that the flywheel of AI adoption is accelerating. Every new development is increasing our capabilities and the pace of evolution. And we are literally only going in one direction here. So what does this mean in financial services? Well, if you look across predictive or narrow AI and generative use cases, these are things that this audience are probably very familiar with, customer facing operations and customer care and customer service as a numerous operational use cases in terms of driving efficiency and end-to-end processes. And in the fraud space, we're talking about anti-money laundering, we're talking about fraud detection, we're talking about lending models in the credit space, we're talking about risk control and assessment. And finance, you can use AI for forecasting and planning, and so it goes. And actually, probably half of the production use cases that are out there at the moment are in the technology and the AI-assisted coding space. So accelerated development, and we'll come back to that point. But there's multiple narrow use cases. And then with the overlay of generative AI, we're talking about agent systems, we're talking about intelligent chatbots, and we're talking about natural language operations over the top. There's a nice example in the Next Wave portfolio. We have a firm called Transparently AI, who a couple of years ago developed a forensic accounting AI. So 140 different underlying machine learning models and a super accurate engine to detect fraud in publicly published accounts. And then more recently, they've built an AI agent overlay. So now you can talk to the model. So essentially you have the world's first synthetic forensic accountant, and you can ask for, what's the riskiest firm in the FTSE 100 based on accounting indicators? What's the risk score on this particular corporate? You can sort of swing it around and say, who's the best and the worst auditors? That's an interesting question to ask. But genuinely automated AI forensic accounting assistant. I've seen some of the output, and it can write 30-page forensic accounts reports in a few seconds that would otherwise have taken humans weeks to do. And so there's so the use cases go on. There's many more. Bank of America has an AI chatbot that's live across 40,000 commercial banking customers, and they're using the same technology on the trading desks. One of the tier one banks is using natural language as a knowledge base accelerator across the whole of compliance. There's a big Swiss bank that are using AI for data quality and financial forecasting. And we'll come back to use cases in the context of agentic AI a little bit later in this discussion. Here's one that the Next Wave team built. So using a low-code automation platform, and this is for regulated fund onboarding. It's essentially client onboarding in the investment management space. There's what I think is quite a neat workflow and dashboard here, sort of 40, 50 different onboardings happening at the same time and being digitized in terms of the document flow, the approvals, and the onboarding steps, which is pretty useful in itself. But what's also been built in here is the piece on the right, the project chatbot, which is an overlay of a natural language engine, and that allows queries across the data and the workflows. So, for example, what's the assets under management that we're onboarding this month? Which onboarding projects are ahead? Which ones are behind? Where are the high priority issues and risks in the onboarding activity? Genuinely useful stuff that would have taken humans a very long time to unpick, and in fact, really coordinate and orchestrate across multiple activities and touch points that are all happening at the same time. So it's an example of a conversational generative AI in the business context. And I think this is somewhat where the industry is with a lot of the SaaS based and AI based services that are out there at the moment. Obviously, there's new things coming every week and the sector is moving at pace. But if you look across the platform technologies and the SaaS applications that many of our clients are using, this is kind of for some sort of state of the art at the moment. This is what is now out there, and most of the alliance technologies that the Next Wave team works with, the platform tech and the low code tech, has this sort of capability now in the box. So let's get into myth busting a little bit. So perhaps myth number one: everyone else is further ahead. So we hear this all the time when we sit down at industry roundtables and conferences. The first question is always, what's everyone else doing? What can I learn from the rest of the sector? And there is a nervousness that others may be further ahead. And I think if you're not doing anything on AI, then that is very likely to be true. So pretty much every progressive firm, and even those sort of in the middle ground, are invested now in AI. And we surveyed 12 of the world's largest banks, and AI was a top 3 board priority at all of them. It was a top 1 priority at many. They are really now firmly into the adoption curve. However, many firms are still on the left-hand side. So we've got a picture here that really lays out a maturity curve. Exploration, high impact use cases, the ones that can be demonstrated to deliver return on investment, and the ones that attract further investment. And you get to sort of the middle of the curve here. And then we're talking about wider enterprise-wide AI adoption. Perhaps that example I gave of Bank of America using AI engines for commercial banking customers and then applying the same technology to their trading desk is a good example. And then unlocking value and driving ROI. There are some stats out there. McKinsey noted that 79% of firms are working on AI, but only 1% realizing business benefits to date. So perhaps not so many firms on the right-hand side of this curve yet, but the point at which ROI can be proven, and that underpins more strategic investment cases. And then on the right-hand side, we're talking about business strategy, integration. And we would very much say to clients, don't just write your AI strategy, write your business strategy powered by AI. And once you start to embed AI opportunities, AI models and approaches into the business strategy, that's when the true value is going to come. And if we look at the left-hand side, what are the maturity drivers? What are the things that are propelling firms successfully on their AI journeys? It's the data readiness. It's the wrapper of the operating model and the governance and the risk framework. It's the leadership top down on investing and leveraging AI. And it's building for regulatory compliance from the beginning. And fundamentally, it's the talent, the culture, and the literacy. And we see this again and again talking to Next Wave clients. There are huge disparities inside the same firms in terms of AI literacy and understanding. We had one of the big banks at a roundtable event where the data science and engineering team were very much on the front foot. They've been building AI for years and had a lot of different models. They built their own language models and a number of different applications. But on the left-hand side of the table, we also had the head of one of the business areas who said, well, I don't really know what this AI thing is and what it's going to do for my business. Complete difference in depth and understanding, and leveling up on the literacy and the awareness of what AI can do is a fundamental point. And I think that gap is very apparent across the sector. So we'll come back at the end of the discussion on some of the things practically that I think folks can do right now to get on the front foot, and bridging that literacy gap is certainly one of them. So to get a better idea of who is leading, at one place, certainly the place I looked for an assessment of AI maturity at a firm level is Evident AI, who are benchmarking the top 50 banks. And I saw recently that they have also been benchmarking the insurance sector. I think that one's just come out. This is an expert assessment. It's based on public data and a range of third-party data sources, and is pretty comprehensive. Each company is assessed on 90 individual indicators across 4 pillars, and those are talent, innovation, leadership, and transparently. I spoke to the outgoing HSBC Group AI head, EJ Altner, about this a couple of months ago, and the big institutions are certainly paying attention to this benchmark, and HSBC have moved up the rankings compared to the previous year, which EJ was pretty happy about. So if you want to know more about that, then listen to that episode 2 or 3 weeks back on LFP. And if you want to look at the rankings for the major firms, I suggest this is a good place to start. And given that they're at the top of the table, I thought it might be interesting to have a quick look at what JP Morgan are doing. This is something that's out there from JP Morgan about their focus and status with AI. And it's really interesting, I think, that this starts with the data and the cloud foundations, and this focus on getting their applications running in cloud and running in what they call modern processing infrastructure. And that the central pillar of this is not just a leap to generative AI, it's actually a continued expansion of what they call traditional machine learning. So those machine learning models and narrow AI applications across customer, trading, operations, fraud, and credit areas. But as you might expect for a firm with JPM's scale and being top of the rankings, according to Evident, there's also a lot going on in generative AI. So it appears that JPM have 40,000 engineers who are using AI coding assistants. They've got 100 generative solutions in production and a couple of 100,000 users, I guess most of the firm, on their LLM suite, which is their desktop productivity automation suite for administrative and repetitive tasks. So really a lot going on and on the front foot. And if we then look at what KPIs are coming with those applications, there's a few here which I think sort of put it into context and contrast. And I love the remove no joy work that they've called out here. I mean, it's just such a nice label for that huge amount of activity that really doesn't necessarily add to the business and to your USP, but is nonetheless necessary at a foundation level to keep the lights on and keep the wheels moving. And if you can automate that, then it frees up resource and cognitive capacity to focus on the value add. In particular here, JP Morgan have called out something called Smart Monitor, which is a tool that uses AI to find stocks, absorb call reports, look at stock moves and ratios to highlight trades. They're claiming 50% productivity gains in coding and operational automation. And then on the advisory side, they've got something called Connect Coach, and it's really taking market insights, analytics, and helping their advisors prepare for meetings and derive ideas for next best action for trades. Not everyone can claim the 90%, the 83%. Not everyone could be doing all of this, of course. So whilst they're leading the way, these examples perhaps serve more as a demonstration of what's possible and a guide for your strategy than something that should be in everyone's 2025 delivery plan. But I think it's an interesting illustration of where the sector's going. JP Morgan aside, and not being entirely satisfied with the sector index, we've been taking a closer look for ourselves. We spoke to 12 of the largest banks so far. A number of buy-side firms are aiming to cover 20 institutions. And really, we were talking to them about their AI ambitions and progress. And what did we learn? Well, it's a top board priority for everyone. In some cases, it's number one in terms of future business strategy and investment. The focus on AI, how do they leverage that for business advantage, competitive advantage in the sector, and driving the business fundamentally going forward. And nearly all of the firms that we spoke to have moved beyond experimentation and are identifying high impact use cases and investing strategically, rolling those out in production. Examples include news and sentiment analysis, anticipating market and asset price moves, investment research created by AI, IPO drafting, that's S1 filings. Some firms told us that they could automate 95% of that and take a 2-week process down to minutes. We've got automated trade reconciliation and settlement, and we've got regulatory reporting, filings, and automation. It's very clear that in 2025, demonstrating return on investment is going to be a key focus. Only 3 banks that we came across so far have committed to hard dollar ROIs. That's JP Morgan, DBS, and BNP Paribas. However, there's going to be more of this, and it's very much a focus this year of not necessarily running hundreds of multiple POCs, but doubling down on the production use cases and demonstrating the value to the business. And in order to do that, successful execution is everything. And there are a number of different considerations and factors that firms need to think about and navigate. Under the regulatory and risk management banner, it's about controls, audit trails, explainability, scalable testing and monitoring, testing for edge cases and market extremes, kill switches on AI. These have all come up in discussions, and these are all things that firms are working on. The lack of consistent regulatory guidelines is a challenge. So the EU AI Act is more definitive. It's more principle based and thematic based in some of the other regulations. So how do you accommodate that? How do you design for current and potential future regulation in autonomous systems? That's a big focus. On the technical side, it's about the data. So aggregating the data, handling the gaps, ensuring that it's consistent. How do you mitigate bias? How do you handle privacy? And how do you make sure that your data is essentially AI ready? And that leads into the infrastructure point. You need robust, well-controlled, scalable platforms to manage complex agentic AI solutions that are sitting on that infrastructure and on that data. And so firms need to think about really building an AI architecture. And this isn't so much about string and sellotape, it's about platforms and layers and building strategically for scale and for control. And then on the market and systemic side, there are real concerns around herding behavior, self-reinforcing market dynamics from AI models, and potential amplification of market movements, so similar to the flash crash scenario. So a whole lot of things for folks to deal with. And what are the AI leaders doing well in their firms? Well, and here's a few guidelines and a few quotes. Prioritize serving the customer. Treat AI as an enabler and an accelerator to do the things that you're already doing better. That's your first principle. Love that one. In a regulated industry, it's less about the frontier LLMs. It's more about operating with the right risk and legal framework, with testing and evaluation to prove quality, consistency, and repeatability. So building that in from the outset. I think it's very true that firms need to build for interoperability to be able to leverage the latest models. But the model itself is just a small part of the overarching deployment and operating model and governance framework and integrations in which these solutions need to sit. Connect AI to your business strategy. Nice quote here. Don't high five because you've delivered a data science workbench. High five because you know you've improved a lending process or a mortgage process or a credit card process that benefits the customer. Focus on the end-to-end business outcome. Have your process engineers sitting side by side with your AI teams and the organizations that focus on the workforce to bring them on the journey to understand how AI can benefit them rather than being a risk. Those organizations are going to be the winners. And one of the ways you can do that is enabling firm-wide, team-wide structured innovation. So not just a free-for-all to play and sort of build stuff, but creating an innovation framework which provides the tools and the data for folks to get hands-on, but in a structured way, where everyone is focusing and pulling in the same direction. And we have a few quotes here from the banking survey. I like this one. It's the fifth one on the slide. The biggest issue at the moment is over-enthusiasm of colleagues wanting to chase the next minimum viable product instead of focusing on true value. Well, that's true, certainly from the conversations that I've had. And the last one there, key to the regulatory question, is transparent communication with regulators. They want you to succeed. And that's an interesting point. We've spoken to legal partners of ours who are dealing on the front line with a number of these regulatory questions on how to regulate for AI and what do I need to do to stay in alignment with the regulator. And I think it's very much true. The regulators are also navigating AI adoption. They want firms to succeed. They want responsible AI adoption. And in fact, just at the time of recording this a couple of weeks ago in London Tech Week, the FCA announced a regulatory AI sandbox. They're doing that with NVIDIA. These initiatives like that are all about creating a platform for firms to experiment and build responsible, regulatory ready AI. Myth number 2, Terminator versus the toaster. So this is an interesting one, possibly the most cinematic myth, the idea of AI as a sentient, all-powerful entity making humans obsolete. So Skynet, HAL 9000, it makes for good movies. It's not our current reality in FS. There is an existential concern, I think a very valid one. It's really off topic for this discussion, but related to artificial general intelligence, and the question as to what's going to happen when the machines are smarter than the humans. And that may happen pretty soon. So Elon Musk said maybe not in 25, but definitely in 2026. I think other big tech leaders are not far off of that prediction. So, whilst we're grappling with Gen AI and Agentic AI in the enterprise and in the day-to-day this year, I think AGI is not far over the horizon, but not for today's discussion. AI as a tool for the enterprise, I think, is where we're at the moment. So more toaster than Terminator. And whilst perhaps humanity is safe for at least the short to medium term, it's possibly not the same can be said for the job market. There have been a number of predictions. It was the Anthropic CEO recently said that AI could wipe out half of the entry-level white-collar jobs in the next 5 years. So that's a warning about low-level knowledge worker jobs, but it's nonetheless alarming and I think a signal of where things are going. However, there are plenty of examples of analysts and leaders in the AI sector who can point to job creation from AI. So it's more about elevating the job, freeing humans up from doing the mundane and the tedious work, which is now going to agents, and creating investment capacity to do more value-added activities and to hire people and to further up the value chain to do more interesting things that drive growth for the business. Customers still want to talk to humans. Klarna famously replaced 700 customer service employees with AI last year, and they're now currently in 2025 hiring back human workers, perhaps not the same number, but they're doing that because of declining service quality and customer dissatisfaction. And they have said, we made a mistake. The human is still in the loop. I think, it'll be a rebalance, but I think this is all about a reset and a rebalance of the human and machine working together. When chess computers, when Deep Blue beat Garry Kasparov at chess in 1997, did that mean that chess grandmasters became obsolete? Well, no, they started using chess engines to train to become better players. The same is true of the calculator and the accountant. And so whilst I think AI is going to touch every job, there are plenty of predictions that it's going to change the job market, but it'll change the job market in a way that we'll be doing more interesting things and we'll be building more useful stuff, focusing on growth, rebalancing the job market and the employment experience to human benefit. I think it was the World Economic Forum did a study and they said they think there'll be more job creation than job loss. So anyway, there's two sides to this argument, but for now, certainly we see AI as an accelerator for growth and efficiency across the sector and something that clearly is going to be value add to all the firms that adopt it successfully. AI is an opaque black box. Well, this is a crucial concern for the financial services sector. Obviously, in a highly regulated business, you need to understand why an AI model makes a particular decision, be it a loan approval, a fraud alert, or an investment recommendation. How can we ensure fairness, transparency, and compliance with diverse global regulations? And all the regulators are looking at this, all the firms are asking these questions. How do we explain, when we put human people, essentially on the block accountable for the outcomes to customer, how do we leverage AI in a way that that risk is acceptable? And I think the reality here is that explainable AI and AI governance is possible and the field is advancing, but it's with caution and incrementally. So explainable AI is best thought of as a set of tools and practices to help humans understand why an AI model makes a certain prediction or generates a specific piece of content. And once you start to unpack the elements of an AI platform and apply appropriate oversight, testing, and audit approaches, essentially an extension of the model risk management approach that's been out there in the modeling world for a very long time. And you start to test and guard against bias and hallucination in your models, for example, then you can start to explain what's going on to a degree. I think there's still not a complete understanding of how LLMs exactly do what they're now showing that they can do. But certainly there are explainability techniques. There's things like Shapley and feature set techniques that are correlating outputs with inputs and go a long way to explaining what's going on. And most of the leading firms that are adopting AI are using those techniques. I think the FCA reported that more than half of firms using 3 or more explainability methods. We're seeing firms appointing heads of AI ethics and safety. I don't think that was a thing. I don't think that was a job a few years ago, but it certainly is now. And we know a few of those at some of the big banks across the sector. Establishing AI operations, AI ops governance, and that's the framework of policies, processes, and tools to ensure that your AI systems are built and deployed responsibly and effectively. And so again, frameworks building for control and for safety from the beginning. And in those frameworks, integrating tools that have been specifically built to address regulatory and control concerns. There's tools like Credo AI, and they're providing use case registries, AI risk hubs, regulatory ready policies. So you can essentially integrate AI risk frameworks via API. I think that's a great way, certainly for the mid-market firms who might not have the resources to build their own policy and process frameworks, and certainly to stay on front of the market, that they can now in-source essentially via API, so sort of API first risk and governance by plugging in tools that have been built specifically to solve those challenges. And at the enterprise platform layer, we're seeing the big firms like ServiceNow coming out with AI control hubs, again, integrating policy and process libraries and creating this sort of control tower functionality to be able to look across all of the models, all of the agents, all of the bots that are in operation, and to provide that observability and measure what they're doing and control it. And lastly, building in collaboration with the regulators. So we touched on that earlier, but using the regulatory sandbox, building regulatory first, regulatory ready, super important that firms are doing that. So I think the summary for me here is that the focus is on the management of risks, not avoidance. And the progress is going to be cautious and incremental. AI being plug and play or impossibly complex. Well, I think the answer is in neither of those extremes. It's somewhere in between. I mentioned a few minutes ago that if you've got the latest model, that's all very well. If you're using ChatGPT or Claude or whatever it may be on the desktop to do some generative activities. But when you start thinking about multi-agent workflows and how do you integrate that with the enterprise, it's not plug and play. It's all about the integration. It's all about the governance frameworks. It's all about fitting in with the data structures and the infrastructure that's already in the enterprise. So you do need an architecture. You need an AI architecture. So McKinsey's version is on the right-hand side of this picture. And it does look very complicated. But once you start to break it down, this is in many ways no different to other enterprise architectures that have come before, but there's a few new components. So there's things like AI control towers and large language model orchestration components. And these are the pieces that are now starting to come to the front in the enterprise space. We've got things like MCP, Model Context Protocol, and that's a standardized way for AI models to attach and access data and services provided elsewhere that have really been built to a standard, so you can plug your AI models into external data and services. And those are crucial parts of these architectures. The fundamental principles of enterprise technology still hold true, though. So you need to build your data as a foundation. The adage garbage in, garbage out is only magnified by AI. So if you've got bad data and you're using AI to accelerate and increase the volume of output, then you're just going to have a bigger problem. So high quality, well-governed and relevant data is the non-negotiable starting point here. And we see a lot of firms hugely focusing on the data foundations with that knowledge that really, if you haven't got your data in order, you're going to struggle to use AI effectively at all. Taking an iterative and agile approach. So that's been out there in the systems engineering world for a decade or two, but very much true, even more true of AI with the amount of POC experimentation, the sort of self-navigation that firms need to go on in terms of context engineering, prompt engineering, process engineering around these initiatives, and the fact that they can be built quickly. You need to fail fast, learn from the experiment, recalibrate, and go again. And it's very much true, partly because of the scale of evolution, but partly because of the this is a path that most firms have not yet trodden. So we are all feeling our way, and it's about experimentation, adapting, and then scaling out. And the governance aspect is super important as well. We've talked about that. So sort of three things: data as a foundation, iterative and agile approach, and the enterprise operating model and governance. Those are the fundamental pieces, which I would certainly add and overlay to the AI architectures and advocate that any institution is investing in. And if you were to say, well, what should my AI strategy cover? Well, I really like this definition. Your strategy is your business vision and ambition, together with a creative and coordinated set of actions to deliver against your key challenges and objectives to realize business value. Wow, that's a bit of a mouthful. What does that really mean? It's really calling out that your strategy is not a statement of intent. And we do see strategies that sometimes are a bit more just a statement of what that firm wants to achieve. It's actually the how. So a strategy is nothing without the roadmap, the operating plan, or the execution plan, as it's sometimes called. It's a set of actions that will get you there. So you need to define what's your level of ambition. What do you want to be famous for? What does the business want to achieve in business terms against business KPIs in your sector? So whether that's new markets or a certain scale or being the best at certain things. And then it's a coordinated set of actions to get you there. And we would always advocate that your AI strategy is embedded in your business vision and your business strategy. That's where you start, but you can then break it down in terms of the value add use cases, the priority use cases, and the key processes and operating model that they sit with, the underlying data availability, the governance of that data, the architecture for the data. And then it's about your AI stack and your AI technology itself, what platforms, models are available and that you want to use and are appropriate for your firm. Overlaying with the governance and control, we talked about ethical AI policy and data privacy, risks, control and governance, and then underpinning it all, spelling out the skills and the organization structure that you're going to need and the humans that you're going to need to build and deploy. And when you orchestrate all of that into a delivery plan, you can line that up against the maturity curve that we looked at, exploring adoption, expansion, integration, optimization. So you can build a roadmap that takes you through that adoption curve. And you need to really focus on all 5 layers of the roadmap. It's the use cases, the data technology, AI governance, controls, organization, and skills. If you leave just one of those out, then you're missing a wheel on the vehicle, and you can't deploy and without addressing all of those things in parallel. And the other call to action here, the fundamental call to action, I think, is to start now if you haven't already. So the learning and experimentation window is generally estimated for enterprises at 12 to 18 months. And if you're not well into that flow of learning AI, deploying AI, recalibrating, and starting to build, then there are many other firms, your competitors, that are well on that journey. And by late 25, 26, some of the analysts believe that you're either an AI enabled firm or you're one without, and you are running out of time to catch up. So everything's moving so fast that if you don't get on that adoption curve now, then if you're not already on it, then that window to catch up and stay on the front of the industry is starting to close. Lots to get on with. And what's next? Well, this is more of a now than a next. So the 2025 focus has swung dramatically to agentic AI. This graph is one that I found related to earnings calls and public interest mention of agentic AI. What is this agentic AI thing? Well, it's AI models that have agency and can undertake actions and tasks for humans. And there's been exponential growth in interest here, which has only continued into 2025. And it's where it gets really interesting. And this graph is from one of our AI specialist partners, AI Risk. The credit here to Simon Torrance and the team. And they've created a very nice graphic that breaks down the different types of generative AI that are out there and really calls out the different types of agents. And I did notice that the latest version of this actually has an extra pillar in the purple section on the right. So they're now calling out several sub categories of agentic AI. But essentially, on the right here, we're looking at autonomous agents, so single agents that take on a persona or undertake a particular task automatically as a really essentially a synthetic worker. If you put them together, you've got multi-agent workflows. So you've got agents taking on perhaps a role of a compliance persona and another agent as a research persona, and they're working together on defined workflows, so end-to-end process workflow, and attached to that workflow in the enterprise. And I think that's where firms are now starting to see a huge amount of value. You're seeing that across platforms like ServiceNow, Appian, UiPath. Many of the workflow vendors now have agents in the box, which can accelerate those end-to-end workflows. And then on the right-hand side, you've got the fully agentic teams, and those are digital twins, synthetic workers that are literally working alongside their human colleagues with full agency and creativity. And that's a bit frontier territory for most firms. There are a number of institutions now consciously setting their agentic team strategies. If you go to the conferences, this topic is packed out on the theatre sessions. It's super interesting and a lot of interest in how this is going to play out. But for FS, you do need to look at it through the context of a regulated industry. So if you give an army of bots agency to run the department, how do you ensure they stick to the corporate processes and policies and that you're controlling that? So for me, I think the combination of agentic teams with enterprise workflow, AI, and automation together is really where it sits, and that offers a huge opportunity for the sector. If we're asking, some might be, what's the difference between generative AI and agentic AI? Well, on the left-hand side, as I think we've all come to learn and now using every day, generative AI is all about generating content, and the risk considerations here are mostly bias and hallucinations, copyright infringement, and it's really about content creation, productivity, natural language interaction. For agentic AI, you're taking that a step further, and it's about achieving an outcome. So we're giving the AI tools, and the AI has tools to achieve outcomes, and it can either drive your keyboard and your screen, or it can perhaps trigger other corporate processes and operate autonomously. They can learn, they have memory, and they are really taking the place of humans in the corporate workflow. And that then introduces new risk and ethical considerations, because suddenly it's, well, who's accountable for the outcome? What happens if you make a bad loan decision, or the agent doesn't recognize a vulnerable customer and treats them badly, and there's some non-ethical decision making? Well, whose fault is that? So an extra dimension of control and governance and ethics to be thought about, but also huge potential advantages. If you've got thousands of agentic workers working alongside human colleagues, then there's so much more that can be done. And this is a report the City put together at the start of the year, which really called out what they called the do it for me economy, which is about the agents doing it for you and the nature of work that could change as a result. City saw a boost in sector profits, in banking sector profits, as a result of agentic AI, but they also saw a lot of job cuts as well. I think 200,000 job cuts coming from the introduction of agents. We're starting to see that. I think for me, that's sort of job elevation and creation at the same time. So I think we're going to be doing different things. If you look across the sector, what could these agentic teams be doing? There are numerous use cases. So without talking to all of this, certainly automated document reviews in the institutional investment space, dynamic loan decisions, so agents who can play the part of a lending officer and take credit decisions, for example. Compliance agents overseeing and monitoring trading activity and running control estates. All of these things are being looked at, and all of them are possible with the right combination of automation and models. But I do think everything needs to be looked at through the lens of regulation, control, and governance. I've said it a couple of times already. This is going to be incremental. It's going to be stepwise. It's going to be proving that the AI can give a better result, more accurate and explainable result that's ahead of the humans, or at least comparable with the human capabilities. And then I think sort of incrementally, putting the foot on the accelerator to increase the amount of agentic activity across the organization, but at each step measuring, proving, demonstrating that it's under control. I'm sure we're going to see some blow-ups, but this is direction of travel, and it's going to be fascinating over the next 6 months, 12 months and beyond, to see how this all evolves, and where some of these agentic use cases start to really get visibility and come to the fore. So just to give an example, this is one that the Next Wave team built, and this was a collateral process for a global reinsurance company. And in this process, insurance carriers were providing large collateral positions, so financial data and securitized collateral positions being sent over to the firm in question and being essentially reconciled on a very large spreadsheet. And it was a sort of 18, 20 tab mega spreadsheet. And the process took a couple of weeks end to end. Collateral data packs, if you like, were coming over via email, attached to email, snippets of data coming in to an inbox. They were being manipulated on a spreadsheet, and there were multiple lookups of things like FX rates on bank websites and SharePoint updates, and manual analyst activity to recalculate the collateral position at the end of this flow. Either some cash or some securities moved to rebalance the collateral position. Highly manual, highly error prone, lots of human effort. This flow was taken, we took this onto automation software end to end, so onto an automation platform to create a digital workflow. And at the top end, there's a couple of agents. The one's doing email monitoring, the other one's doing intelligent document processing. And this is about reading the incoming information, categorizing and routing correctly through what then follows, which is an automated calculation engine. There's an analytics engine that's been integrated into this workflow tech at this point. So actually we did this using the Appian toolset end to end, and the Alteryx toolset for the calculations, for the complex calculations. And there's a human in the loop at the right steps here, which is why, some of these things take longer than a minute or two, because there's a review and release. But essentially the workflow can run in a few minutes, and it finishes with some automated document repository updates and some payments and security instructions at the tail end of the flow. So we've essentially lifted something off of a complex manual process into an agentic workflow with a human in the loop. It's a very simple agent workflow. So perhaps to take an example of where we might be going with a more complex example. So on the AI risk graph that we looked at a few minutes ago, this would be on the right hand side. This is essentially a function, a business area being run by an agentic team. This is a buy side example. So in the investment space, where you have agents or synthetic workers, digital twins, if you will, undertaking the research and analysis role, a portfolio management role. The risk management roles is different agents working together just the same way that humans would work together to run the operations, run the data, to make the investment decisions, to run the risk on the portfolio. And they're self-learning agents that can interface with users and are integrated with the underlying data and enterprise platforms in the business. So just to bring this to life, and this is one that we've been working on in the Next Wave Lab, essentially as an AI experiment, as an agentic experiment. It's pretty simple for those who are deep into the agentic space. And this won't necessarily be something new, but for other people, it gives quite a nice illustration. We've got 4 personas here. And we've got an orchestrator. I don't quite know why the orchestrator doesn't have a name, but we've got a planning manager who's called Jennifer, a risk and treasury expert who's called Sarah, and an operations and technology specialist who's called Michael. And these are personas, they're agent personas. They've been essentially prompted with a description of their professional background, the capabilities that they have, the things that they do, and the tools that they're allowed to use and how they work. And that essentially is the prompt into the model. This one is running on Chat GPT 03 Mini. We found when we first did it, and I think we did this on 4.0 initially, the agent calls were costing something like $2 a call, and by moving model we got a better outcome, and it moved to 10 cents a call. So there's a cost consideration in all of this. Interestingly, you don't need much more than this prompting to really set up the personas. You can use the foundation models. One of the experts that we spoke to in this space said that when they tried to tune the model, in more detail, they actually had more a worse outcome, more persona drift than actually really providing some fairly high level prompting to set up the personas and then allowing the agents to really learn from the workload that they were processing. And in this example, we've got the agents working together to do a piece of what is a product control activity, potentially within a major banking organization. And that's about collecting data from positions and portfolio updates and pricing. And then those pieces are brought together to calculate, recalculate the book essentially. The agents in this example are only doing a small part of that workflow. They're just going to get the data essentially, but they are working to map out what's needed, where to get it from, what metadata structure to fit it into, and a plan to run the full process. And they are working autonomously. So if we look at this, and it'll go too fast for anyone to actually follow in detail, but what we're finding is that the agent personas are talking to each other. They're saying, I've looked at the risks and on the data that's been collected, I've collected the data, I've built a plan. So actually the orchestrator is summing it up at the tail end of this flow. So it took a few seconds for them to work together. We've completed our enterprise analysis of front office trade, present value and risk fee data. The implementation plan includes all the compliance requirements identified by Sarah, all the technical specs from Michael, and it's been structured by Jennifer into an actionable roadmap. The plan is ready for execution and includes all necessary controls, integration points, and resource requirements. And the output is a set of data and that plan. So this is a tangible step in a longer process, and an illustration of synthetic workers working together. There's a French insurance company where the customer care team is being run by humans, but also by a significant number of AI agents, synthetic workers working alongside the humans. They're all talking to each other on the same Slack channels and dealing with customer queries. Due diligence consultants that are doing using an agent team to do risk and cost analysis on major capex expenditures. So this is something that would normally be done by a big four consultancy over a number of weeks, and it runs in a couple of hours at a fraction of the cost and produces 50 times the number of financial scenarios and outputs that would have come from the human team. So something to think about. When complex knowledge work like that can be done in a matter of hours by agent teams, what does that really mean for the advisory space? So we'll all have to think about what this means for the future. But once you start to see these agent teams working together, really, or certainly for me, brings this into contrast, and you can realize how close we are now to really synthetic teams doing the sort of work that otherwise would have been humans on keyboard and mouse. And let's see where this goes. So what does that all mean for the future? Well, for global financial institutions, the opportunity is, I think, transformative to achieve new levels of efficiency, manage complex risks with greater precision, to unlock innovative value propositions, and to truly deliver exceptional personalized customer experiences. The future of finance, I would say, is not a contest of human versus machine. It's one of human plus intelligent machine. So the human strategic acumen, your ethical judgment, your deep market understanding, all of those things can be powerfully augmented by the analytical capabilities and operational scale of AI and automation. And three things that you can do tomorrow to get on the front foot with your firm: educate, educate, and educate. We talked a lot about literacy earlier on. Invest in your data access and data quality. It's all about the data for the foundations. And establish the organizational and operating model to support firm-wide business-focused innovation and safe AI solution deployment. We should really welcome AI as our intelligent co-workers, but recognize that its human qualities and judgment that are just as important. As Satya Nadella, CEO of Microsoft, said, the next 10 years will be as much about the human experience and the human condition as it will about technology. So that's a lot. Let's leave it there. And lastly, if you've got this far in this episode, thank you for staying with it. And if you're wondering how Next Wave might be able to help you, well, setting your AI strategy and readiness, so really layering AI into your business strategy and goals, helping you with your solution implementation, your roadmap developments, building out those governance frameworks for agentic workforces. This is what we're doing for a number of clients. And it all starts with a conversation. So do get in touch if you think there's something we can help you with.